You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That music means it is Thursday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in your portfolio? Let's find out together. My name is Mark Longo, and it is time for the Option Block. Of course, beaming at you here from the OptionsInsider.com studios, as well as, of course, from this fine network upon which you've been listening and mainlining all these busy last couple of months here. Glad you guys are enjoying the slew of content hitting you, whether it's boot camp yesterday, OPR, recording a little bit later. Had to move it around because of the Ally Big Investing Conference there, so it got recorded today. It'll be hitting the feed later today as we speak. So you guys are going to get a three-fer today. You're going to get OPR, you're going to get TWIFO, and Option Block out there today. So lots of stuff hitting you out there today. Tomorrow, of course, Vol Views. All sorts of fun stuff in store. Glad you guys are liking it. If you like what you hear, keep those reviews coming on your platform of choice so people can continue to discover the program. And, of course, as always, keep those questions coming. We do love to hear from you guys. And joining me on the program today, first, let's go out to the shores, the hinterlands, the dregs, some might say, of these here United States, where we are joined once again by the rockingest of lobsters, Mr. Andrew Giovinazzi from OptionPit.com by way of Carmen Line Capital. Mr. Rock Lobster, welcome back to the program. Hey, did you see, by the way, Trump tweeting about the lobster industry recently? Something about happy lobstering. Did you see that one, Mr. Rock Lobster?
I did. I'm surprised that, I know it might, but I don't actually follow the president's tweets because I think, I try to follow as little as possible actually on social media, but I'll look for the lobster tweet. I think that's good for it's good for the lobster business.
Yeah, we were going to forward it to you, and I think we got busy there, but it was right up your alley. It was something about happy lobstering or something like that, something completely ridiculous. Lobster was actually trending. I think lobsters was trending yesterday on Twitter. So we thought it was you at first, but lo and behold, it was just Trump. All right, and also joining us a wee bit closer to Chicago here, it is the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program, sir.
Always happy to be here. Some people think that they're more of an uncle than me, but I am the uncleist.
You are indeed the most uncle as we head on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. You know what time it is. Time to break down what is lighting up the tape out there today. A mixed day here on the old streets where we're seeing most of the major indices kind of struggling to find their footing, coming off the heels of a couple of days now where it seems like the bulls took a bit of a rear back seat. You know, we've been talking endlessly on this show about this rally that seems to be unstoppable. And in the last few days, a growing specter of perhaps more contagion out there, spooking folks and sending the Dow and the S&P into a bit of a tailspin over the last few sessions. Today, it seems like they're struggling to regain a little bit of their footing. Coming into showtime now, we saw the S&P did dip close to that 3,000 level again today, but now it's up a bit, down to about 3,000, up to about the old 30 double out there, puts it up about 0.15%, so up slightly on the day. We saw the Dow up about a similar percentage. NASDAQ leading the charge ever so slightly, up nearly 0.25%. Coming into showtime, the VIX was at 34.25. It actually puts it up from our last show about 1.5 points. It has settled off a bit since then. It's off about 0.75 of a point from there, so that puts it 33.5, which puts it up about 0.75 of a point from where it was this time last show. All right, and VVIX, our old friend VVIX, at about 134.75 puts it up about 2.25 points, and our old friend VXX coming into showtime was at about 36.75 up there. So that puts it up an even handle. That has given up some of that as well, back as well now, up about 0.5 point because it's about 36.25 right now. So those early gains we saw on the vol product starting to retreat a little bit as this mixed day tends to head into the green out there. Of course, it's not exactly surprising, perhaps, that people are fading this rally, and the rally has maybe had a little bit of a turn out there because looking at the numbers, we've been talking about it for a while, kind of how perplexing this endless degree of upside is some nuggets coming out of Bloomberg. So I believe David Ingalls over at Bloomberg, he crunched the numbers looking at the S&P futures, saying they're the most heavily shorted they've been in 9 years, since 2011. This chart is from a few sessions ago. I think this is right before the big sell-off started earlier this week. But still, seeing all this data out there kind of backs up what people have been thinking for a while, that people are not really buying this rally, at least from an overall viewpoint perspective. And yet, literally, they are buying it because the market continues to go up. Of course, keeping on that trend that the Meatball and others have been hitting on for a while out there now, just how dominant big tech is becoming in this rally. Looking at some numbers here, these came out of, from I'm not familiar with, Yardeni Research. A lot of people sent this to. I think the folks at StockTwits are talking about this, about how now it's the FANG M. They throw Microsoft in there, but the FANG M, if you add Microsoft in there, now represents 24% of S&P 500 market cap. And if you look at this chart here going back to 2013, you can see just how much it has outpaced pretty much everything else, the FANG M versus the rest of the market out here. It's pretty ridiculous when you look at it just on a pure line graph basis out here. So a lot of interesting things to keep in mind out there. Also worth noting, firms may be a little bit dubious about what's going forward as well because they're sitting on more cash than pretty much any other time in recent history, looking at the percentage change, how much cash they're putting in their pockets. It's up much higher in Q1 than it has been in any other quarter for the past few years out here, coming in at 14%. So firms sitting on cash, people shorting the futures, FANG M dominating the S&P 500. Who knows whither we go from here? But it is an interesting setup for a market out there. Let's go around the horn. Let's go back the opposite of the way we came. Let's start in Uncle Mike territory. Mr. Uncle Mike, sir, what is lighting up your tape in this? What's starting to be an Uncle Mike type of day out here, sir?
Well, the things that I'm looking at right now for my aggressive trading, I have my rules that I can't have more than a 5% initial allocation. Markets are negative on the year, which they are not, which makes times like this much more relaxing for me than if they would be, me being the bull that I am. But what I did yesterday was I did sell a very small put spread on this dip. And what I looked at was two things. As the SPY is going lower, we did bounce off of the 200-day moving average yesterday. We did go below it a little bit today, but my thought is that in order for this market to continue to go down, if it's going to do the same thing that it did yesterday, meaning have a pretty massive sell-off, it's going to have to go through a 200-day moving average, and it's going to have to go through the 3,000 mark in the SPX. And so it's for those reasons that I really felt comfortable getting a little bit of skin in the game. Now, granted, markets are still weak on the year because of the fact that they're down on the year, and so by my definition, that does make them weak. So I'm not necessarily too excited about jumping into this with both hands, but I think that in the near term, what seems to be happening with the S&P is that we're kind of channeling between 3,000 and 3,200 in a lot of ways. So we're at the lower end of that channel right now. So we're kind of doing like a little rolling stock type of thing with the entire market. So that's one thing that's lighting up my tape. The other thing that's lighting up my tape today, a lot of financials are doing well. So if you look at XLF, that's up roughly 40. Sorry, just going to a different screen here. It's up just under 40 cents, 37 cents on the day. So up 1.6% on the day when the market itself is pretty much flat. It's up slightly, but not that much. So definitely getting some movement out of the financials. That's for sure today. With that, though, I think we did get beat up pretty bad in those yesterday. So everything else in terms of the sectors within the market appear to be flat, with a little bit of a gain in energy or slight gain in energy, and then utilities, not a huge section of the S&P 500, but those are down on the day. So that's what's lighting up my tape from the standpoint of the individual underlyings. Excited to hear Andrew's take on the VIX with how it reacted to yesterday's market as a sell-off as well. But the thing that I'm noticing, though, is that we are going way up and way down. But what's interesting about this market is that 3,000 is a pretty tough nut to crack, and 3,200 is a pretty tough nut to crack. And I'm curious to see how this plays out as the summer goes on. That's what's lighting up my tape today.
3,000 is indeed a tough nut to crack. We flirt with it a few times, but you're right, folks. Like to maintain that level at least for the near term here. Let's go out to the Rock Lobster. Speaking of lobster, Mr. Lobster, we did find that tweet for you out here now. Trump accuses Obama of destroying the lobster and fishing industry in Maine. Now it's back, bigger and better than anyone ever thought possible. Enjoy your quote. He even puts it in quotes himself. Enjoy your quote lobstering and fishing. Make lots of money! Exclamation point. So, Mr. Rock Lobster, you now have the grace and blessings of the administration to go forth and enjoy your lobstering, sir. That's my new favorite word, lobstering. I didn't know that was a thing.
You know, it is a thing. You drive down my street. Well, not my street, but you drive down the block, let's say. But almost everybody has a stack of, not everybody, but let's just put it this way. There are more lobster traps in my town per capita than probably any town. Like, you will definitely drive down any street and see a pile of lobster traps somewhere. So it is a thing. You got to get those lobsters out of the water.
I just didn't know that was the verb, lobstering. I thought it was called something else.
Well, it's kind of like Mainer is a noun, or is it an adjective? It's all very confusing, actually, once you cross the Piscataqua River. It's like my thing with Maine. It's like a third world country with good roads and internet that works. So, if you want to live there, you're in the right place. But as far as Obama wrecking the lobster industry, I don't know if that's what happened. I know that a few years ago, lobster prices got really low. So I don't know what kind of rules and stuff got changed. But it still is a pretty vibrant industry in this here. And I know that the fishermen are pretty conscientious because they don't want to overfish the fishery they have there. So there's a lot of state organization as well. So we'll see how all that goes. But anyway, I digress. Vol. Well, I just posted, Volman just posted something, and TOSAW was saying about, where the VIX is. And I think right now, right, you look at a day like today and you see Vol, the straddle for the 29th of June was $100 SPX. And I look at that, and I'm not saying that it can't do that. I just feel it's expensive after we've had those big moves, because the reality is we've had a lot of, just the last couple of weeks, we've had those big giant moves like, okay, everything is great. And then, coronavirus, everything's going to stink again, right? So the market kind of has this sort of binary switch. It's either, are we all going to have to shut down again, or have we figured out how to actually deal with, masks and stuff like that. So I think that's we're going to have to come to grips with somewhere of just sort of surviving with the virus, I guess. And I think the market's a little back and forth about that. Sure, it maybe got ahead of itself at 3,200. I don't know. Because people still aren't fully back to work. A lot of unemployment checks are still being collected, and there's a lot of uncertainty globally about it. But the thing I've noticed, everybody said it's really bad, but I guess we're surviving. So I don't know, as far as from a vol point of view, the vol is pricing the move we just had. We got down to a 25 VIX, a week and a half ago, 2 weeks ago, right before everything ripped. My guess is that's where it goes again when everybody's kind of okay with until they see how bad the Texas thing is, and the reporting on it is so difficult. I really have been trying to figure out what's exactly going on, and I don't think it's a slam dunk figuring out what's going on. In those states, is it really bad? Is it really good? Is it because they're testing more? Are they testing less? So it's a whole, let's just call it a cornucopia of unknowns. And as of right now, the more unknowns we have, the market just doesn't like it. And I think that's what's keeping vol where it is. Is vol fair at a 30? Well, it's pretty easy for us to move 2%. That's 32 vol. So I think it's a fairish price. But if market players can see past the virus, okay, we can live with it and slowly we'll kind of get back to normal in a year or two, then the vol will subside. So I think it's it's fair for where it is, but at the same time, in order to keep a 33 vol, we have to keep those gyrations going like we just had. And that's the big deal. So this vol will stay here if we keep having power moves. And right now on a day like today, vol doesn't go down immediately, mostly because the liquidity providers haven't probably bought any back yet. So they're going to wait it out and see what happens. So I could see vol going down. What's today? Thursday. Friday, and actually, maybe by into tomorrow. Fridays are generally kind of a low point for vol anyway for the week. And we'll see what happens. But I think the vol it's fairish here if we continue to move like we have. But I'm not so sure once the Texas news, Florida news, and once news starts to percolate out that people can understand. If it's bad there, we could be lower. Why not 2,800 SPY or 2,800 SPX, something like that? That certainly can happen, I think, easily, to be honest. So, that happens. Then where are we and where do we stand? Vols maybe back to 40, 42 or something like that. So, I think, like I said, the vol is reflecting what has been happening, but not necessarily happening today. Some of the news has now come out. It's not as bad, I think, as everybody thought it was going to be, and the market's kind of having a small bounce. So we'll see how long this bounce lasts.
Yeah, we also had some jobless claims numbers coming out today, which are still bad, but perhaps not as bad as some people thought. So that also probably contributing to a little bit of the turnaround out there today. Let's see if this turnaround is amounting to some volume out there. Let's break down the big indices first. VIX, kind of light at about 137,000 contracts as of a few minutes ago. The ADV just a tick under 400K out there. The SPY at 3.08 million, so a little bit different story out there, a little bit more robust paper out there. The ADV about 5.4 million. The S at about 426,000 contracts. The ADV 1.2 million, so at about a third out there in S land. And the ADV hasn't really ticked up markedly yet with the pit back. Again, obviously there's other considerations to take into account. There's only been a little bit of time since the pit opened up, but still some people have been watching that to see how that's going to materially impact the volume numbers. We'll keep an eye on that going forward. The Q's at about 523,000 contracts, the ADV 917,000, and the IWM at 405K, the ADV 691. A little bit more active day out there in the single names. Cost you about 170,000 contracts to break into the top 10 today. Gets you to beyond. Number 9, good old Diz, $176. Number 8, Bank of America, 188,000. Number 7, Facebook, $192. Mostly frequent offenders here in the top 10, except for this one. Number 6, Snap. They've been popping in there of late. 211,000 contracts. Number 5, American Airlines, 253 on the tape. Number 4, our friends across the street, they're Boeing, 293,000 contracts. Number 3, AMD, 295,000 contracts. Numero dos, Tesla, 324. That means number 1, Apple, 538,000 contracts. Where would the brokerage industry be without Apple over the better part of the last decade? Some of the unheralded impact of Apple. Everyone talks about the iPhones and the snazzy gizmos, but it's in the trading business where they've had a lot of impact over the last few years. Let's look really quickly out here. There are still some earnings popping off out here, listeners. You can check the earnings move and earnings move results reports out there from our friends over there at Orax Land. Some names you still have heard of yet to report, like Nike after the bell today. Nike coming into Showtime, they were at $100.08, and they were pricing in $4.31. In the past, they've moved $4.72. So a little light there, but I guess as we talked about in this season so far, I guess that's kind of merited out here. We've also got, Micron on the docket as well. They're on the 29th. They were at $48.29 coming into this report. They were pricing in $2.90. In the past, they've delivered $3.20. So it's kind of in line with everything else we've seen out there, pricing in light vol, despite the fact that it's kind of a weird, unprecedented time out there. You can check out Micron and Nike and a whole bunch more for yourself there, listeners. FedEx is on there as well. TheOptionsInsider.com is the place to go. Really quickly, Mr. Rock Lobster, we are about 6 months into the year, so it's a good time to check in on our trends from our friends over there in Google land, see what's going on in options land from an options interest perspective. We all know it's pretty high, and that's pretty much the case. If you just take generic search terms like options right now, it's pretty much at an all-time high, at least for the last year or so. Remember, Google ranks these things on a kind of level of interest, 100 being the peak, and some fraction of that below that. So, and it was at 75 about a year ago, and now it's at literally at 100. The line is peaking right now. So options interest, kind of anecdotally, we've all heard and seen this, talking to the brokers, seeing the volume out there. We kind of expected that, but Google confirming that for us as well. If you get a little bit deeper, you go something like options trading. Generic term like options could have all sorts of other things baked into it. Options trading also pretty much right about a high. Looks like at about a 90 some odd as of the time of this graph, which was, I think, a day or two ago. And it peaked at 100 earlier this week, actually. So, and a year ago, it was at, 25. So, options trading interest has surged dramatically over the course of the past year. Didn't quite get to 100 in March, which is interesting. So, recently, over the past week, it was even higher, probably commensurate with that sell-off we saw not too long ago out there. So, interesting stuff. Mr. Rock Lobster, some sad news for you, though, and your ilk. As you're celebrating your great lobstering, you will be sad to know that Maine is no longer the Mecca when it comes to U.S. options interest. In fact, you're no longer in the top 5, sir. Number 5 is Minnesota. Number 4 is Colorado. Number 3 is Washington. Number 2 is Oregon. And number 1, D.C. I think this, again, speaks to what I've said before. They rank this per capita interest, so a handful of people in a small area could really goose the numbers a little bit. If we get a little bit more focused, let's get to options trading. The number 5 is California, so that's a little bit bigger out there. Then the back again to small town, North Dakota. Then New York, number 3. Hawaii, number 2. And then D.C., once again, number 1 out there. So interesting stuff out there. Mr. Rock Lobster, what do you have to say for yourself? Clearly, you dropping the ball in Maine is what has led to Maine losing its title as the number 1 option search mecca, sir.
I guess, you know what happens? I go a week not searching, and look what happens. I guess what's funny, Minnesota? What is that? The capital of ROBINHOOD?
I don't know where they're based. I don't think it's Minnesota, but I'll have to take a look.
It's kind of funny. But yes, I'm very I'm sad that Maine is no longer the capital. But I just figured, Robinhood is just going to take over the world. They're going to take over the trading world.
Well, maybe if recent headlines are any indication, perhaps not so much. I actually have a listener question about that, so we'll get to that in a little bit. Meanwhile, though, we have to keep on heading right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. Let's get weird. Let's get wild. Let's kick things off. This has been a frequent offender on the Odd Block. Hasn't been on in a little bit. This is our old friend, the Duck, a.k.a. Duke Energy, ticker symbol DUK. Trading right now, $79.10. Let's see. This is the name that over the course of the past year has had some travails. A year ago, it was trading $90.12, so a wee bit higher than it is right now. Kind of hung out in that range, trended up to nearly 100 in October, then sold off again to like 88. So it was in this high 80s to high 90s range for the better part of the year until, of course, February kicked off. It had just surged up to over 100 for the first time in the year. And then, of course, February hit and we saw it sell off. It didn't sell off as hard as others did right away. It sold off to 91 or so, and then it bounced back up. In March, it actually bounced back up to nearly 102 again. So it seemed like it was rallying. And then mid-March hit, and then Duke really took it on the chin. March 23rd, 64.15 was their low. Actually, intraday, they hit 62.13, so pretty much cut nearly in half. And since then, this one didn't wait too long. A week later, it was trading 71. Over a week, about 10 days or so later, it was trading in the 80s again. So this thing had almost a definition of a V-shaped recovery. By early April, it was trading $90 again. So this one only flirted with the downside ever so briefly. And before kind of getting a lot of that love back. It gave some of that up again in May, back down to 80 again. Then it rallied back up to 90, and it's right back now to where it is, 79.05. So it's kind of been a weird post-March period for this one. Aggressively back up, then kind of giving it back, then aggressively back up again. If you didn't know, you're looking at this chart, you might think it was just a crazy biotech that had some sort of drug announcement coming out here. But let's see what our Eye of Sauron found out here for us today in the Duck, a.k.a. the Duke. That's like that ticker symbol, D-U-K. They couldn't get the E. They couldn't go for it. Let's look out here. Duke getting 10,000 of the July 75 puts going up for 102.1, which is an interesting price, especially when you consider the bid at the time was 105. So someone had to go a wee bit through the old bid on the MIAX to get this bad boy done to the tune of 10,000 for 102.1. 75 strike. That's a fairly aggressive line in the sand, all things considered, considering this thing hit 62 not too long ago and has gotten down recently again. Right now it's at the low of the last few weeks, but it did threaten into the 80s. Right about the 80 handle back in May before breaking it now. So it has a tendency to want to test that. Mr. Rock Lobster, what say you about this pretty aggressive line in the sand? It's only about 4 handles out of the money right now. Worth noting, there are no earnings in this cycle. Listeners, earnings are coming up again on the 6th. So whoever was writing this line in the sand was careful to avoid earnings in this cycle. Another week and change and you would have had it in there. So no earnings, Mr. Rock Lobster. Just a fairly aggressive, pretty sizable near-term line in the sand in the Duck.
Sometimes I think you pick these just so you could say the symbol names.
I have no agency over this. It is the Eye of Sauron, sir. I just like to mock the symbols.
This is Duke Energy, right?
Yes.
Probably. Hey, everybody's at home using energy, right? Like everybody's at home. Who doesn't have their computer turned on, watching Netflix, trying to learn how to use their oven and cook bread? Like, what the heck, all these people, buying flour all of a sudden. Like, they don't even know how to use flour to cook, and all of a sudden there's no flour in the stores. So I assume they're trying to use their ovens to burn it all up, and and then that takes power. So somebody's just whacking some puts out. Do you like how I made that thread from the flour in the store to the put sales?
Yeah, that was an interesting winding tale you just wove there, sir.
Just to really spin everybody's heads out. I don't know. I just sold some puts today myself, not in Duke, but I think I think people are looking at the volatility and they're looking at, okay, well, maybe that's about, it's $1, right? That's 1% till July. And they're going to take their 1%. They're going to take the fact that VIX is 33. And again, I think this is sort of the same situation we had not long ago where, find a ridiculous price and sell the put. Now, this one I would say is not ridiculous. It's not like selling the 50s for $1, like we saw maybe in March, but it is an aggressive play, but I can see why they're doing it. To me, this looks like they want to just take the stock. That's the simple answer. And possibly, I was trying to look on a dividend to see if they can get the double whammy with the wheel trade, where they take the stock, collect the dividend, and then write the call for the 1, 2, 3 triple play action. And I'm just looking at that div now. So they're not going to pay a dividend until, let me see here. Not till they just paid one in May, so we're not going to see another one till August. So this has an outside chance for stock collection to pay the divvy and then do the right. Looks like they're going to get a dividend in middle of August, and it's 94 cents. So let's see. They write the call for $1, write the put for $1, collect the dividend for roughly $1, and then sell a call for roughly $1 against it, and take and deliver at 75. So that would be $3 against a 75 entry price. And, when you do it that way, then it's almost, what is that? Like not quite 5%, but 4.5% till August on a utility. So that potentially could be a pretty decent play. So I have to say, if you're out there and you're looking for collecting a divvy on a stock, working the divvy play, and doing the wheel, you got 3 chances to make $1, and that's essentially 4.5% until August. Which, if you look at the SPX, I think you might take 4.5% in the private market till the end of the year at this point, given what's going on. So decent. I think it's a decent looking idea.
Yeah, it's a short-term one. We'll come back to this one. It's funny you mentioned the wheel, because I looked at that and my first thought was, this feels like a wheel. I don't know why it leapt off the screen that way to me as well. But yeah, it just has all the hallmarks of the beginning of a wheel trade. Maybe the fact that it's so near term kind of makes it seem that way as well. But you're right, getting $1. Maybe capture another $1 if you're lucky. If the stock hangs out a little bit. Maybe you get a little bit of appreciation on the stock as well if you get the second leg of what they call over there in St. Charles / RCM land, the triple income strategy. And then you get out for maybe another $1. Interesting stuff out there. We're going to watch this one and come back to it. Our friend Wheeling in the Duck. As we keep on heading out. Another 3-letter D name out here for our next name. If that was too rich for your blood, we got you covered out here with DHT Holdings. That stands for Double Hull Tankers Incorporated. Take a guess what they do. Ticker symbol, as I mentioned, DHT. Trading right now, $5.17. Pretty much unched on the day. It's another one that's had a turbulent year. A year ago, it was trading a little bit north of it, $5.65. Then they rallied all the way up to $8.60 or so, right in January. Then we know what happened after that. It was pretty much an aggressive sell-off. By February, they were already back down to $5. And then in March, they actually kind of hovered around. So they were out there low earlier than the rest of the market. And then they cut it down to about 4 3/4 or so and kind of hovered out there for a while. And they bounced up again and sold off again, then bounced up again to $7 and change in March, almost $8, $7.95, and then sold off again down to $6 in April. So kind of an interesting period. Of course, we had negative crude coming online during that time. So then we saw it spike again up to about $8.50 later in April and kind of hover there for a while before selling off again down to pretty much where it is right now, $5.17. So the negative crude kerfuffle, all the crazy premium that went into tankers and shippers and everything else like that, seems like all of that has gone the way of the dodo out here in DHT. We're pretty much right back to not that far away from where we were at the lows there in February and March for DHT. Let's see what our Eye of Sauron has picked up out here. It seems like someone's fading the heck out of this bad boy, Mr. Rock Lobster. So our first print that our Eye of Sauron found was actually about a 5,000 lot of the OX6 calls going for 30 cents on the bid. This over there on the Philly. And then this sounds kind of interesting, so we dug it up a little more. We found actually an hour earlier, 7,500 of the OC5 calls also went up for 60 cents, also on the bid. This one on the Philly, this one was tied to stock at $5.15. So they sold 7,500 shares, excuse me, against 7,500 contracts for 60 cents against 435,000 shares of DHT at $5.15. So in the span of an hour, Mr. Rock Lobster, we have over 12,000 OC calls going up at the money and slightly out of the money. Some tied, some looks like just straight up out here. So someone harvesting the heck out of the upside here, Mr. Rock Lobster, but also doing it with stock in that first leg. What's your thought here on someone sucking some of the juice out of the upside here in DHT in October, sir?
Well, an October right? DHT. To me, all this stuff is always a yield play. And October, okay, a little bit funky on this one. It's like, it's like they own the stock and they want to just take, see if they get, they'll take their 10%. I think there's a constituency out there right now that just doesn't want to spend a lot of money, right? Or I'm sorry, they're just taking yield. Some markets are just, you feel like we're not going to get any big lift here for a few months, and they're just taking the dollars they can and being happy with it because they got pensions to pay and all that kind of crap. And at least they're going to have the call premium if the stock doesn't do anything. So I think ultimately it's okay. I don't like selling calls that long term because it sort of defeats the purpose of owning the stock. But it has a shot. There's definitely a way to make money there. So better than nothing.
So he did him tied in that first one. So he does have a stock leg to it, listener. So it's not all just straight up blasting out on the upside here. Didn't do it 1-to-1, obviously. Excuse me, on a bit of a funky delta out there. Let's see what our last one, speaking of funky, let's see what our last victim has in store for us out here from the Eye of Sauron. This is a new one. This is Horizon Therapeutics. This is a pharma, obviously, an Irish tax-registered pharmaceutical company that rebrands, repackages, and reprices specialist drugs for sales into the U.S. Why, oh why, would they register in Ireland? I wonder. I can't possibly figure it out. Ticker symbol HZNP, HZNP. Trading right now, $56.84. A good day for them, up about $1.84 or a little over 3, about 3 1/3%. A year ago, this thing was pale shadow. What it is right now was trading $23.88. And then it was a nice long trek up to, in January, about 38.5. And then they started selling off by March 23rd. They hit 22.69. So kind of giving back the whole year and a little bit extra out there. And then all of a sudden, the warm turning out there, and they're feeling a little bit of upside love. They peaked out at 50.75 on May 29th. Then they sold off a bit again down to the mid-40s, and now they're on the second leg of that V-shaped rally all the way up to where they are right now, $56, almost $57 out there. I'm going to go out on a limb and say this probably has something to do with corona treatment. They don't say exactly which drugs they have here, but probably something that has been identified as useful or effective out here in all things corona. But our Eye of Sauron doesn't care what they do. It just wants to know what's going on. Let's see. Our Eye of Sauron highlighting, looks like some AUG call action. Meaty AUG calls. Again, this is a pretty volatile name out here, so perhaps not that surprising out here. Let's see. We got AUG double calls, AUG 55. So these are in the money, hence the meatiness of these. Going up 5,900 times for $4.20, so almost exactly mid-market. They were $3.50 at $5.30, so heck of a market here for in-the-money calls on HZNP. So, yeah, pretty wide one. This guy kind of split in the uprights out here. These were opening over there on the NOM, the NASDAQ options market. There are earnings baked into this cycle. They are on August 5th. So, Mr. Rock Lobster, a bit of a head-scratcher to close us out here. It's in pretty much almost exactly mid-market extremely meaty, extremely beefy at the money, now in the money call here in HZNP with some earnings jupes baked in as well. So what is your spidey sense telling you about these beefy $4.20 AUG calls, sir, in HZNP?
Well, there's nothing like paying $4 in a $2 market, right? For a
yeah, that's painful.
Not a lot of liquidity. Hard to tell what they actually did with them. Did they buy them, sell them? Kind of a little bit below mid-market. It feels like this is maybe some kind of buy rate action, to be honest. I'm not this is one where I'd like to see what the flow master would have to say. Maybe just somebody selling into some strength and taking some dollars, because I think if you look at the biotech index, it's at a 1-year high pretty easily, I believe. I think there's nothing wrong with just taking some money in these big boys, and and that's a pretty rich premium. $4 is, you're not going to complain too much about collecting those dollars. Again, we're back up to the 7-8% range for premium on some of these stocks. And that's, at 33 VIX, that's going to get some attention from people.
Yeah, I had the kind of a whiff of an overwrite to this one. I'm looking here. The vol was about a 49% on this, and it did come in a little bit. Looks like after the trade. Of course, the stock is rallying too, so that probably is contributing as well. And it's not a ton, about 4 points. So probably leaning towards the overwrite. It kind of has that whiff about it. We're going to put this in the to-be-watched category as well to come back to. Meanwhile, it's time to come back to your questions. It is time for the Thursday edition of the Mail Block.
It's time to take your seat on the All-Star Panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, let's get right to it. See what you guys have on the brain. First off, analysis with a Z out here. Asking, this is what you were talking about earlier, Mr. Rock Lobster. You're talking about Robinhood driving this rally. Analysis saying maybe not so much. Pump the brakes there. He says, do you think Robinhood should get more flack over the death of their customer? It hasn't been a good run for them with, looks like it got cut off here. I think he means with the shutdowns or outages they've had recently as well. Yeah, it hasn't been a good PR news cycle for them, certainly out there. The most infamous, obvious, we just talked about it on Boot Camp yesterday. We talked about it on Option Block and other shows earlier. It's just a horrible story of this trader out there. Obviously, didn't really understand options that well. He's selling put spreads, thought he was risk limited, and of course he got hit with a debit on an early exercise, a huge one because it was in Amazon, something to the tune of $750,000. Scared the hell out of him. He didn't understand what was going on in this position, and he took his own life. It was tragic. Do they deserve more flack? You can't really blame a broker for someone taking these type of drastic actions. Can you give the broker a hard time for not making this information more clear-cut? Yes, I think you definitely can do that. And to their credit, Robinhood is taking action on this. They have announced a variety of improvements with their platform. They said here, their founders, they noted that their customer cited confusion with their product in his suicide notes. In response to that, they say they're doing some things that you probably could argue they should have done to begin with. We have argued for many times that if you're going to trade options and offer options on your platform, you have to at least offer some of these things. They say they're mulling changing some options offerings, including more criteria and education for investors seeking level 3 options authorization. Obviously, that's what this guy had. He had level 3. That was kind of my surprise. This guy got cleared for level 3 didn't understand these basic things, which is also surprising to me because I kind of thought level 3 was pretty standard across most of the brokers. I didn't think brokers could add their own criteria to it. So maybe level 3 will be harder to get on Robinhood going forward than other platforms. That's a little bit surprising to me. More education on options trading, including some early options assignments and the planned hiring of an options education specialist. Well, yeah, you probably should have done that from jump. So they're doing that now. That's good. Changes to messages and emails sent to their clients about their, quote, multi-leg option spreads. That's a good thing. They probably should have done that from jump as well. The firm is also adding details to their in-app history page to help users understand the mechanics of early options assignments and working on changes to their UI, including the way buying power is displayed. So get rid of those scary $750,000 debits that are showing up on your screen when they're really kind of meaningless when that's not happening in your account. So those are probably things that should have been done earlier. It's a sad fact that it took the death of a client to kind of facilitate that, but it is good that that is at least happening. Mr. Uncle Mike, we talked about this earlier in the week. It's kind of a sad story, obviously, but it is an important one, and one, obviously, it is causing some change out here. What are your thoughts on these changes that Robinhood is making, sir? And also, are you, like me, did you think that level 3 was kind of set in stone, or is there some wiggle room with the brokers on that, sir?
Well, so when I was at Options Express over 10 years ago, when I first got into the business, I was hired as the first actual real job I had was at Options Express as a field representative. And then this is after I wanted to get out of the life insurance selling business and kept my license, but still. And then I had worked up to the director of education at Options Express. And so we had a staff of education people at Options Express. And so in addition to the education that you got when you would go to an event with the CBOE or the MERC or at the time the ISE or the Philly Exchange, those are the ones that we always did a lot of joint events with. You'd also have education through the broker itself, along with the paid educational offerings that were out there at the time, which are still available today, of course, through Mark and Andrew. So education's something that's really important. And when you're trying to trim the budget, that's usually one of the first things that goes. Thankfully, we never had to do that at Options Express, but it's something that's very important. I remember going to the money shows. There was always someone from like an E-Trade or at the time Thinkorswim or somebody. And, we'd talk and hang out like, oh, yeah, you're the Thinkorswim version of me, or you're the E-Trade version of me, or whatever. And that was just very common in any broker that wants to use the option product. So I think it's important that you do that because ultimately, even though it might cost money to have an educational staff, it's ultimately going to benefit you in the long run because traders are going to ultimately trade longer. And so with that, the other thing that they did at Options Express was typically after you would go to an event, the people that would be at the event would trade more after the event. Now, with that, we wouldn't pitch trades. I wouldn't go out there and say, hey, buy some calls on Apple today or do this, do that. I wouldn't say that. But the effect of what that would have that would, I think, be beneficial to Robinhood, if that's what they're trying to do is get darts, would be and I'm not sure what their pricing structure is. I'm sure they make some type of money on option transactions. But typically, after an educational event, whether it's a webinar or whether it is a in-person event, at Options Express, even in the 2008 days when nobody wanted to trade anything, the trades would typically become more frequent after 30 days before and 30 days after. They'd almost always be more frequent 30 days after an educational event. So I would encourage them to really not skimp in something like that because ultimately it is a profitable thing with what it costs you to actually have it. And it's really important to do for reasons like what we talked about last week.
Yeah, this is, everyone likes the idea of a no-frills broker, cheap, low cost, low barrier to entry. That's attractive to a lot of people who don't have a lot of capital. I get it. But when you're trading products like options, there's a certain inherent complexity to it and sophistication that you could expect from the platform out there. And when you go the no-frills approach, if you're just focused on zero cost, it leaves some of the other important factors by the wayside, including things we talk about here on this network all the time, like education and information. So yeah, it's a tragedy that it took something like this to force their hand a bit, but I am glad to see that they are taking these steps. Yeah, I'm with you, Uncle Mike. They probably should have more than one option specialist. You really need a team. Look at what we've done on this show just with various brokers like Fidelity and others, really having teams of people to handle their options customers and clients, because it does require that. Can't have just one guy, but I guess they're starting with one. Hopefully they pick a good one. Maybe they should call us up and ask us for our recommendations out here. But still, yeah, it's interesting stuff out here. We'll keep an eye on this. We're trying to get them on the network to come talk about this. They're obviously a little bit cagey about coming on right now, given all the other things that are going on over there. We want to get them on here to talk about this a little bit and see kind of exactly what their thoughts are on the options product as a whole. They've been kind of reluctant to talk about options in general, which to me is always maybe a little bit nervous. Are they really that vested in the product? Maybe this change over there will show that they have more interest in options for the longer term. Speaking of longer term, listeners, we're kind of coming up against it, so we got to keep on rolling into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, where we tell you what we're watching for the rest of this week into the weekend, at least till we get together here for Vol Views tomorrow. And by the way, I buried the lead at the top of the show, Mr. Rock, Lops, and Uncle Mike. The number one single indicator that shows our economy is in the toilet as a result of the coronavirus. Chuck E. Cheese filing for bankruptcy this morning. So a kid can no longer be a kid. That is just the nadir of our economy there. Ed Napier, listener, chiming in saying, this pandemic is killing the American economy because of Chuck E. Cheese. Yes, I'm with you there, Ed, and everyone else. That is a sad milestone, unfortunately, to see out there. But again, kind of inevitable given the fact that no one wants to go anywhere and really do things that require a lot of touching of other things right now, especially with kids. Kids are gross to begin with. If you've ever been to Chuck E. Cheese, you know it's kind of a dicey prospect to begin with. So, yeah, it's a sad, sad state of affairs. My childhood, I have fond memories of Chuck E. Cheese. And no longer, at least hopefully this restructuring will allow them to remain a going concern in some capacity. Mr. Uncle Mike, we'll start with you again. Outside of this sad, sad news about Chuck E. Cheese, what are you keeping an eye on for the rest of the week into the weekend, sir?
I mean, first Toys R Us, now Chuck E. Cheese. I mean, what do we have left? Oh, good gosh, I don't even know. This is sad news. When I'm just watching the 3,000 mark, I think that for now, 3,000 and the 200-day moving average are holding this market up for the short term, and curious to see if it continues to do so. And also just watching the election polls. For the time being, Biden looks like he's pulling ahead in the polls, but we were on this show 4 years ago, and the polls turned out to mean absolutely nothing at the election. So curious to see how that goes. And once these debates start, I really believe that that's going to be a factor in the way the market moves come this fall.
Well, thankfully, we have a little bit of time until then. But, yeah, we're coming up on convention season, which will be, thankfully, a minimal one this year. And then, of course, beyond that, it's a straight-on sprint into the elections. If the VIX futures are anything, then they're predicting a wild time heading into the fall. That could, of course, be for other reasons as well, not just the election. Mr. Rock Lobster, we're getting ahead of ourselves. What are you keeping an eye on for the rest of this week, at least until Vol Views tomorrow, sir?
I want to see how we react to all this news, and what happens. Like, what's the actual, Are we fearing? Are we going back to 2,800? Do we go sideways? Does the ball hold up? It's all COVID related, and until there is some sort of break that people can recognize, I think volatility. We're still going to stay in the danger zone. We have not broken out of it for 3 months. Actually, it's March, April, May, June. So it's going to be 4 months of vol staying there, and at this rate, it doesn't look like it's going to go away anytime soon, but I still believe it's a premium selling opportunity for those that want to get into stocks, as long as you can afford to take the stock and deal with the reality of that. I still think it's an opportunity. There's half of the S&P 500 is basically still at fire sale prices. Technology, not so much. Certainly fully valued as much as anybody can see. So I don't know how much opportunity there is there, but that's what I'm looking at. Essentially, just I'm looking out of the money, and let's see where it goes.
Unfortunately, that music means this show has to go all the way to its inevitable conclusion. If you're listening live, saying you want more in your ear holes, I see you out there, We got Mrs. Wartsoff, Ilionel, interesting names in the chat today. Tony, longtime listener Tony, all you others out there. Don't worry, there's more coming. Twyfo's coming up in exactly half an hour. We'll pump some fun stuff in there in between on the old Options Boot Camp. If you're listening after the fact, like I know many of you are, just hit next on your device of choice, and Twyfo should be there waiting for you. But before we go, let's go back around the horn. Let's start with the land of the Uncle of Mike. Uncle Mike, sir, if I need someone to hold my hand through these Chuck E. Cheese-less times, sir, where should I go? What should I do?
Man, I don't know. I'm crying on someone's shoulder over Chuck E. Cheese's. That's sad news. So, stcharleswealth.com, more than happy to discuss trading or investing or my style of doing both of them in the same thing. stcharleswealth.com, give me a call.
I was kind of hoping they were going to pull it out. I actually had read something recently where they had kind of rebranded as Pasquale's Pizza and Wings to just do food delivery, and I was actually thinking about ordering from them just to kind of support my local Chuck E. Cheese out there. But apparently, it was too little, too late. Pasquale and his delicious wings and cheese, or pizza and cheese, or whatever the heck they had over there, pizza and wings, couldn't save the mouse over there. Mr. Rock Lobster, I'm not sure if they had a Chuck E. Cheese in Maine. It might have been Chuck E. Lobster over there for the local market. But while you're out there enjoying your lobstering, what are you keeping an eye on until Bob views tomorrow, sir? Actually, we did that already. So if folks want to reach out to you and know more about what you're keeping an eye on, where should they go? What should they do?
OptionPit.com is a great place to go. OptionPit.com, look at memberships, check out our goodies, and Mark's been having a good run with our Sharp Bets and Ball Edge products and our Trade Legion product as well. Basically learning how to backspread stocks and look for opportunities to buy premium and watch it move. So those are 3 products that you're going to learn a lot. And anyway, check on us at memberships at optionpit.com.
Memberships at optionpit.com. I got the show flow right one of these days. So many shows out there. Check them out, optionpit.com, to learn more. Stay tuned. We got more fun stuff coming at you here on the network throughout the rest of the day here. Like I mentioned, 3 shows going to be hitting it soon here. Not just Option Block, but you got TWIFO coming up. You got OPR going to hit it later today. In between, if you're listening live, you get some boot camp and fun stuff. So you'll get a lot of stuff coming your way. And then we'll be back again tomorrow for Ball Views, 1 p.m. Central, 2 p.m. Eastern. Then kicks it all off again on Monday with more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.